Hi, everybody. It's John again this week, and I'm joined by Patrick Lemmens. Patrick is a global portfolio manager with Robeco. He's focused on their global FinTech equities fund, and he brings a really interesting background working in not only portfolio management and asset management, but a really deep insight into the global FinTech space from a high level. Patrick, thanks for joining us this week.
Thank you very much. Thanks for having me.
I wanted to kick things off. You have an interesting biography, and I thought we could just take a minute to give you a chance to introduce yourself and tell us about what you do at Robeco.
Yes. Well, I started roughly 25 years ago at ABN AMRO, and I started as a global buy-side analyst covering global financials. And already then it was visible that the financial industry was getting more and more digital. And that's something which I put ever more attention to. In the last 5 years, I worked at ABN AMRO, where I worked for 15 years. I started to run a global financials fund. That was sort of interrupted by the takeover of ABN AMRO by Santander and the Royal Bank of Scotland and Fortis. And they had to let everybody go from ABN AMRO, almost everybody. And then later I wound up at Robeco, where I was given the Robeco New World Financials Fund to run. And and there I started to put more and more emphasis and attention to the digital side of things. We call it digital finance within the financials fund. And that grew larger and larger until we reached a point it was going beyond sort of all kinds of limits of what we are allowed to invest outside of the regular financial sector. And at that point, which was, in the course of 2017, we decided to actually have a separate, fully focused FinTech fund. And we were actually surprised to see at that point that if you looked around in the world, there were a couple of ETFs, there were a couple of Japanese funds, which were only sold in Japan, but there was no actively run global FinTech fund, which was investing in listed equities, that is. So we decided that would be a good idea to have one, and then we ultimately got it launched November 2017, and it has grown now from basically zero to 1.4 billion euro as of today. So yeah, it's been quite a success, and and of course this year has been very sort of dramatic, you could argue, in terms of digitization and an attention for FinTech fund. So it's been this year probably we've seen attention for FinTech get even more sort of significant, and it's a lot of fun. I mean, with a team of total 3 people running it, with the support also from analysts on top of that. And very internationally, with teams on the ground also in India and in China. So it's definitely the digitization of the financial industry is exciting, and happy to be able to be part of that.
It's a very interesting space, as you alluded to, especially in the times we're in right now, Patrick. But before we spend a bit of time talking about that, I wanted to go through a few more of the fundamentals of what exactly the FinTech fund at Robeco is all about. How do you pitch the fund now that it's established when you're meeting clients and limited partners or investors in the fund?
Yeah, well, we always sort of say that the trends we see in FinTech are very strong, and they continue to be very strong. I mean, that was, of course, emphasized this year by an even more rapid growth in digitization than we had seen in the previous years. But we always sort of put it into 3 buckets, or 3 separate sort of strong trends. One of it is that cash, ever more cash is going to move more digital. So payments is a very important part of FinTech. Another part is that the financial industry needs to digitize and needs help with that. And it's not just core IT systems, but it's also cybersecurity, which plays a very important role there. But it also is about how to be better at financial inclusion. That's another important part. And then the final piece of the puzzle is that with most investments right now coming from the US, and still the US is a dominant part in listed, you would say, equities and listed fintechs. We do see increasingly that Asia also and then Europe is growing in importance. And then when we started the FinTech fund, roughly 75% of the fund was invested in the US. And right now we have moved it down towards the 60% levels, and or going towards that range. And more is in Asia, in Europe, but also Latin America. And that's where we also see a lot of opportunity going forward.
Remind me, Patrick, I know we have some slides that we can reference, so whenever you'd like those brought up,
Sure.
I can do so. I wanted to ask,
Sure.
I mean, it's a very interesting value proposition. Some of those who aren't as familiar with the different options as an investor might not realize you're an actual listed fund. Where do you see your competition in the market with other fintech investors, let's say?
Yeah, well, maybe you can show the universe slide, the investment universe we use, which is at the end of the presentation, the PDF, the last slide, I think that is. Yeah, here we got it. So we take a relatively broad approach. So we do not focus only on the data part or the payments part, but we take really a relatively broad approach to fintech. Although I've also seen people take an even more broad approach, including companies which do, for example, salary administration kind of stuff. We believe that it does make sense to have a relatively broad approach, because I mean, maybe of course years in which also the certain tech companies may be on a roll and it's fantastic, but at the same time you have banks and challenger banks who are going basically fintech and being fintech, and there is also opportunity. So we take a broad approach to fintech. We believe that that will pay off over time, as it will give a more good balance between risk and return.
And I guess that speaks a little bit as well to your investment process and the type of companies you're looking to invest in. Can you speak just a little bit more in detail about what it looks like in terms of the operations inside the factory that you run?
Okay, so well, the universe is the first step we have, and then when we start building up the portfolio, it's basically the companies which are put in have weights of 1%, 2%, 3%, or 4%. So basically, typically, what we do is when we start investment, we will take a 1% investment, and then we will look at valuation. We will look at all kinds of screens. Earnings momentum, QR, which is a Robeco score, which is constructed by our quant department, who have lots of expertise and knowledge on how to do that. We look at also ESG factors, so that is important as well. And then, of course, valuation is a very important part where we look at how today the valuation of the market is sort of reflected in the company, and we compare that to what we believe the company can do in terms of growth, operating margin, profitability, and so forth. And if we believe that the company looks relatively attractively valued, we can add additional money to that position. If we believe that the company has very good screens, or if we see that the company has very good screens, then we can also add additional 100 basis points. And then, well, for the highest conviction investments is basically when a company does everything right and also has, in our views, a leading platform, a leading software platform. So basically, a very good software stack in combination with a very strong global platform. And there's only a limited number of stocks which would answer to that sort of strict requirement.
Yeah, that makes a lot of sense, and it's very helpful to understand the type of rigor that goes into your process, and also how that matches with the type of established companies in the fintech space that you're focused on. I know you can't say too much about individual companies themselves, of course, but what could you tell us in terms of the sorts of companies that are in the portfolio, or the types of sectors that you are most interested in at the moment?
Well, I mean, payments remains a very important part of any investment universe in fintech, and we have a very good balance, we believe, in globally, but also between companies which are 100% digital or almost 100% digital, and which of course did extremely well in the course of 2020. So you talk about companies such as Square, Adyen, PayPal, and one name which you would be looking at, but it's not yet listed, is Stripe. But on the other hand, you have lots of companies which are not 100% digital, and they made 20% digital, or 30, or everything in between. But those companies are also very interesting, and they have actually, to some degree, lagged a little in 2020. And we do believe that as lockdowns end, and as travel returns, these companies should do well, because they've been very much underappreciated. Also, we believe underappreciated on the digital side. So you're talking about companies sort of in Europe, Worldline, Nexi, but also in the US, Fidelity National, Global Payments, Fiserv. So broad range of companies which I think are very interesting, and then we are have good attention, or good weights in the portfolio. So payments is an interesting one. I mean, I think if you look at the data companies, so the companies who do the collection of data, the analysis of data, the selling of data, a broad group of companies which also includes S&P and IH Market, and then of more companies there, and there's M&A going on. These companies are typically sort of like very good, stable growth companies, which over time have been very steady performers in any sort of portfolio. They fit well, and we have a good sort of chunk of the portfolio allocated to that. Another interesting part of the portfolio is in the electronic markets space, so the electronic trading. So you've got lots of different companies there who are either fully electronic or moving towards that, and at the same time, often these kind of companies are also collecting and selling data, for example, on the ESG front, which is becoming an ever more part of the world where people are looking at. So it's another important part of the portfolio, which does, of course, also tend to depend a little bit on how volatile markets are, because if the VIX is very high, these companies tend to do even better. We also are very interested in basically companies which are in the financial management part. So financial management is basically where also financial inclusion plays a role. So here we have companies who are managing you and mine sort of financial affairs in a very electronic way. And these companies, we would say, got quite a boost in 2020 as people opened up accounts with them, and it's an interesting field, because you also see, of course, PayPal and Square playing a role with their sort of account offerings and solutions. So lots of stuff happening there. And then the final part of the portfolio, the final piece, so to say, which is actually the slide where you see that big iceberg. I mean, what you see here is that if you look at the IT of any sort of financial firm, but also fintechs, all that tend to be a bit more advanced in their IT. What you see, there's a lot of attention is being given to the front end IT, so the IT where you're dealing with customers. And there is often a lot of investment is being done. But what is sort of forgotten or less attention is being paid to the IT which is under the surface. So the core IT systems where you have to basically make sure that you are really digital. And I think also in 2020, banks and insurance companies and other financial firms discovered that if you're not digital today, you really have a problem, because with everybody working from home, and if you want to have basically operations going on, you really need to be more digital. And it even went so far that Jamie Dimon at a conference said that they have done a lot of stuff in the cloud, and they are very much ahead in that sense. But at the same time, he also believed that they needed to do more outsourcing. They need to give away more business to non-JP Morgan IT people. And so we see a lot of opportunity there. It's been a bit of a challenging industry, part of the fintech space, because with working from home, also the salespeople had to figure out how to actually deal with, because these are typically sort of like people who travel and they meet with IT people and then they sell their software solution. And now suddenly that had to happen digital. And I think they have been figuring that out. From Q3 onwards, we did actually talk to a lot of companies who were sort of seeing momentum improve and then getting better earnings and getting better revenue goals. And I think that will continue in 2021. But you still need to see it filtered through in earnings and in revenues, and that is going to, I think, also happen in 2021.
Really, a number of really fascinating things there that you're touching on, Patrick. I don't know how you stay on top of it all. One of the things we talked about before we started doing the interview today was the market update that you've recently published on fintech markets. I think there are a couple of big themes that really stuck out to you in 2020. Do you want to talk a little bit about what those were?
In 2020, of course, digitization everywhere. So, I mean, you saw a very rapid increase in e-commerce, right? I mean, lots of people who had never done an order online started to do this. I mean, including my parents, and I guess everybody has an example of parents or friends or people who had not done something digital before suddenly doing it. And what is interesting is that it is not just a step change in the use of e-commerce, where 3 years of e-commerce penetration were done in 1 quarter. But what is going on is also that it's not like then it suddenly drops back to old levels. No, it continues. And with that, of course, you see a world changing, basically becoming more digital, and that means more digital payments as well. We have tried to of course, monetize that. I mean, I also already earlier explained, right? I mean that some stocks have really benefited from this because they were seen as 100% digital. But I do also believe that certain stocks were left behind, and they have also profited from the move to digital, and therefore they are now relatively cheap.
Well, speaking of relatively cheap, something that's not relatively cheap at the moment are cryptocurrencies. What do you think about Bitcoin and some of the other major cryptocurrencies?
Well, what we do in our fund is we play what we call the so-called picks and shovel approach. So we try to invest in companies which are making cryptocurrencies, basically the management, the trading, the storage of crypto possible. I mean, very clearly, what happened in 2020 is that with a more institutional endorsement of crypto, that really led to the jump we have seen. I mean, next to the fact, of course, that with a very big generation of money, basically the kind of money generated by central banks perhaps also has created a bigger need for alternatives like gold and in this case also crypto. We try to sort of be not dependent just on the level of the cryptocurrencies, but more the trading and all that kind of stuff. And that's why we very much want to be invested on that side. Regarding the future of crypto and what's going to happen, I think a lot of stuff is going to happen in 2021. We see central banks around the world who are looking at digital currencies. We see, of course, stable coins, another important development where they try to sort of at least take away some of that volatility by linking the value to something more stable, like, for example, regular fiat currencies. So I think regulation also will play a very important role in 2021. So not just in the field of crypto, but also more generally in the field of tech companies, big tech companies, FinTechs. We're going to see more and more attention. And I think it's very important when you talk about digital currencies that central banks think through how they're going to exactly design it, because you have to consider as well, of course, what happens when you sort of have a deposit with the central bank and directly with the central bank and without involvement of a regular bank? What does that mean for the banking system? How do you get then lending going? So I think there's a lot of important things to look at when you are designing this. And the Chinese, of course, have already done a lot on the digital currency side. And they seem to be moving in a direction where it's really just meant to be a replacement of M0, so the cash part of money, while still keeping the banking system involved and having people keep their deposits with the banking system.
It's a very fascinating time, I would agree, Patrick. We already talked quite a lot about how COVID was impacting not only society, but FinTech in particular, and also even the day-to-day business that you're involved with in the investment space with meetings. I was curious, given that we're all doing much more Zoom meetings these days, something we try to do with our interviews is basically provide like an off-the-shelf first meeting for everybody who's watching and participating. So, folks who've watched this know what to expect when they get to a second meeting with you. I was curious, when you're meeting with either an investor or a potential portfolio company, what are the types of questions? I mean, you talked a lot about your process and other things, but what is it you're ultimately trying to achieve with the first meeting, or who is it that you're ultimately trying to meet with these days?
If you would have told me 1 year ago that I would be having constant calls, digital, and then not meeting people in person, I would have probably thought you were crazy. And now, of course, we are 1 year further, and I have had in the last year 300 meetings or so with companies. And yeah, well, the level of contact you get is much sort of higher than you would often have when you meet in person. So meeting with the CEO, the CFO, the Chief Technology Officer has gotten a lot easier. And that means that can indeed already in the first meeting, but often we also have like meetings which are, regular update meetings as we already own a company, or maybe not own it, but we have met with the company in the past. But the advantage is that you can go much quicker and much deeper into the company, because you have all those sort of relevant people on board. I mean, it's great to have an introduction of a company by the investor relations person, but ultimately you want to sort of also dig a little deeper and see the management and hear what they have to say. That is, I think, something which is a bit easier. As well, literally you can attend meetings in 3 time zones during the day without any problem. Whereas in the past, you'd have to travel to Asia, you would have to travel to the US, and now we can do it all in one day. But, I do hope, of course, that at some point we can return to physical meetings as well, because it's also to sort of build contacts and to build better relationships in the end.
I wanted to ask you, Patrick, before we start to wrap it up. I mean, it's been an interesting year, and everybody's reflecting, and I think also with what's going on with technology and society around us, it's a time for really a lot of inspiration. I was curious, aside from spending all your hours researching these fintech companies and market trends, where do you find inspiration beyond the work that you do? And are you a reader, a sportsman, somebody who's interested in other things like that? What's your inspiration?
Regular physical exercise together with my two kids.
I was going to say family is probably a big one, right?
Yeah, no, absolutely. I mean, I've got two boys, 16 and 19 years old, and they're going to the gym every day. So I sort of try to join them as often as possible to stay fit, but also because it's fun to do that.
Yep.
What I actually do also next to my regular job is that I mean, in field hockey is a big thing in the Netherlands, and my oldest son is and what 7 years ago is basically taking care of the training and the material and basically guiding the goalies of the hockey club he plays for, which is roughly 120 people. Can you imagine? 120 teams, 120 goalies. And I try to sort of help them figure things out and get the right material. And that sort of is a very different thing from, looking at fintech and financials. So that sort of gives me something to look at. And then, I mean, I enjoy looking at lots of different series, ranging from Star Trek to Navy SEALs, stuff like that. So it's
great.
So I keep busy with all that easily.
It's been a good year for well, first of all, getting more fit. I have to do more of that myself, and spending time with family and enjoying a bit of entertainment. So not a bad year all in all, and especially a good time to be thinking about the future and positioning ourselves with business and personal lives. So that's great to hear. I wondered, Patrick, we're running a little low on time. Are there any final words or topics you wanted to cover before we say goodbye?
Well, I guess, I mean, going back to fintech, I mean, I think we've had an extremely memorable year behind us, and well, in 2021 definitely has also started out on a very interesting note, I would say. And I mean, through all the noise and through all the things which have happened, and also, of course, also through all the sort of the problems we've seen in the world, because people are sometimes losing jobs or not having work. I think fintech has been also helpful providing solutions, so that's good. But of course, I ultimately am responsible for making sure that the people who trust their money with me get the best possible return. And that's what we've been working on, and that's what we continue to work on, and we see lots of opportunity there still. I mean, I'm as excited as I was when I started in November 2017 on that fintech fund, because then I sort of thought, well, this is going to be a great opportunity for the next decade, and then it hasn't changed. It's still a great opportunity, clearly more people nowadays are looking at it and offering a solution. So I mean, trying to sort of stick to our focus, and then make sure that we do the best possible job. And I guess that's my final message, I would say.
Great. Well, Patrick, I think given all the change, we're going to have to follow up in the coming months and see how everything is doing and what your thoughts are then. Before I forget and before we let you go, I do want to mention we highlighted your market update. and we'll put a link to that in the description for everything. And of course, I assume that you're available via your company website for people who have further questions, and looking forward to seeing more from you in the fund.
Yes, thank you very much.
Great. Well, take care. See everybody soon.